So, hello, and a massive hello to everybody. Hope everybody's having a great day wherever you are, whatever you may be doing. This is 50 pips, rocking and rolling here. No trade calls or recommendations. Every response for their own stuff here for educational purpose only. Sessions are recorded. You'll get an email with the recording as soon as it's over. As long as you do it for your own personal use only, nobody will be blocked, nobody will be banned, and we'll all behave as one big happy family. So, Friday trade, 14th of August, ends our 5-day run of posting the start of this holiday week on YouTube. So hope the guys on YouTube have enjoyed the videos, the snippets here, and let's get cracking, let's get rocking, let's get it rolling. So again, if anybody has anything they want to look at, any trade they're managing, anything they want to discuss, let me know and we'll go through it in a second after we do a brief overview. Yeah, I mean, there's been some interesting stuff to do this morning. I took a trade on Swissy. I got long intraday. I took a scalp on the ES once you saw that puke in the overnight session, and then it just failed to hold below yesterday's lows. That was a very nice little pop back into yesterday's mid. But right here on intraday trades, I'm flat, right? So let's look at doing these. Hey, my pleasure, Peter. Let's do these. So. ES, what's happening on the ES? So a lot of wheeling and dealing. Okay, people be talking about all kinds of reasons why the market has to dump. All kinds of indicators. We know we're at extreme. We know the market looks a little bit tired, but we have to focus on the levels and just trade what's in front of us, right? And here, what is apparent, despite the wobbles we've had at these highs, is that the market, as we said, is stuck but in just hovering above these all-time highs. Now normally you would expect, especially in a holiday week, you'd expect the market to have a very easy job of jamming them up through those highs and triggering buy stops and triggering attracting new buyers at highs, as we all know that all-time highs are bullish, not bearish. So here the fact that it's struggling is really not ideal. I mean, do you need to read that as extremely bearish? It's not bullish, but I don't read it as extremely bearish either, because it could just be consolidating sideways and just waiting for one reason or one headline to ramp through the highs. So I'm not really going to worry about the bigger outlook. I just know that there's no way I want to be going long over the weekend, right? If anything, I'll be holding some kind of tactical shorts over the weekend, and I'll be watching the close today. Clearly, closes above 34.04, so these all-time highs, you can't go home short, right? It's hard to go. You'd be looking to sell a gap up open on Monday or any weakness on Monday. And but again, any trade close inside here is still much to do about nothing. Where this would get interesting is, especially if we see some decent vol come in, if we see this close today below the 10-day moving average, because that would open up the move down. We're looking at that 5 to 10% correction. So right here, much to do about nothing. It's still stuck, but we've got some really important and interesting levels across the board. I mean, you can see how choppy this has been on the 1 hour, and you've had some interesting opportunities, as we discussed in the other webinar. In the other webinars, if you're trying to be tactical, right, there being some fairly cheap and tight plays, right? Even though those all-time highs are close, and tight stops are not ideal here in this kind of market because they're sitting ducks. But you can see here, right, negative 1 hour, you could easily take tight stab here. We discussed some of these. This is a nice little short on a tactical level, another nice little short here, nice little short here. So there have been opportunities to try and probe the downside, but the problem is that they've all been scalpy, right? What I've been trading here predominantly is a lot of longs, tight longs, like yesterday into the close, this morning, right, on a failure to hold back below here, long for a move back here into mid, and just 5-10 point scalps. That's it. But right here is just much to do about nothing. But clearly, if we break down, it should get very interesting. Why is that interesting? Because there are a lot of interesting zones across the board. Now, some people have been asking me about RTY, and even though, again, the RTY is feeling more and more wobbly, it's hard here, right? It's hard. I mean, you could argue that this previous low here is being defended. It just, to me, this whole range is very, very choppy, so I don't want to read too much into it. But again, if you're trying to get short off these highs, right, I just think the problem is here you have to deal with this previous resistance, which is acting as support. You've got the 10-day moving average here. So it's the same thing across the board. If you're trying tactical shorts, you want to stay small and only really add to these if we get a close back below these 1546s. Then you could get a little bit more traction. Then I would be fairly aggressive looking for 1450s to print. But as long as we're stuck here, you know, I think it's just looking at that 1 hour chart or a 15-minute chart intraday and just trying to play off support and resistance. Also, YM is fairly interesting also, because you see how we're really stuck in the same kind of area here, is that, you know, we're stuck. It's broken out and it can't hold that breakout. So I know a lot of people being short here with a stop above these highs. This is the least favorite short, but you know, as long as this holds, it holds. But what you want to see here is the daily close back below. There's a lot of choppy areas and a lot of levels below here. So if you're trying to short, to me, the YM is the least interesting one. But as long as it keeps on closing above, you have the risk of that squeeze and it catching up with the ES, NASDAQ, and everything ending up filling this gap that's still open, right? So it's hard to. I just don't know how you argue that this looks bearish. You can look at tactical shorts, but there's nothing bearish here, right? The context, seasonals, the whole situation, you could have a bias to the downside, but the chart is not telling you sell me, sell me, sell me, right? And if you look at the NASDAQ here, we're still hovering and we're exactly where we were at the beginning of the week, right? More than happy to try tactical shorts, but as we said, as long as we don't get a close below here, you really can't get aggressive. Now on the NASDAQ, because of the way it's extended, if we break below that 10-day moving average, those previous highs, you've got the cleanest room to run to the downside. And again, our base case is still that tech, or in general, we've had this peaked on the 13th of July. So this doesn't, we haven't changed our tune here, but again, it's very hard to get aggressive unless we get a daily close back below here, and that's what you'd want to see. So you just have to be patient. It's been a lot of two-sided action. You can look at this on the 1 hour too. Very, very whippy. I think the only thing, if you know, either you're trying to hold some swings and giving some of these a stab. If not, you're just, you know, you have to just play it by ear and see if you get any kind of traction. I think the action intraday has been fairly clear, right? Fairly easy to read, to be frank, but it is what it is. Some of the other charts we've been looking at, just to conclude here, we talked about ZNs, right, or bonds in general, that we would not be chasing these higher, that the way this was trading, we expected this to come back down. And you see we've had that break lower. So here, again, as everybody's getting uber bullish at highs, I still wouldn't be surprised to see this unfold. I don't have any position here. So, you know, bullish, it's hard to get long unless we take out these highs again. And again, not my favorite trade. Far more interesting to get long if we correct back down inside this area. Right here, to me, it's a little bit neutral. So unless you're trading it intraday, in terms of bigger picture, it just looks, yes, this could unwind as the dollar strengthens across the board, but not too interesting. On gold, as we said, following the close last week, there is no way that you wanted to try and catch this unless it came back into those 1920s and we got that nice little pop. We looked at in the webinar, we had that, how you could have had that tight long here, and this is in play, right? Similar to the bonds. We have to see what happens, right? Is this the dip, right? And we talked about that strategy to get back in for the swingers. Time will tell. If this low holds, there's a very good chance that this was the dip and we're going to continue going higher. If it doesn't, well, then this could correct a lot higher. You know, people are going to say, hey, that's a cop out. No, that's not a cop out. That's just with the levels, right? Nobody has a crystal ball. You know, be very run from people who are certain what's going to happen, because nobody has an idea. Everybody's trying to take educated guesses, and ideally you're trying to structure those trades around those guesses with interesting risk reward based on your strategies, but nobody has a clue here. So the only thing we could say is, would it be surprising to see a bigger pullback in gold? Absolutely not. Has the trend changed? Is this bearing? Absolutely not. So this is the first place these previous highs where you'd expect them to try and protect the breakout, right? So it's not rocket science. So here, the only way you can look at this is, sure, this was a good opportunity to try and scalp and get back long tight, understanding that if you lose this low, the correction might be far bigger, and that this could move all the way back into the 1700, 1650, and that would be a very nice buy from a bigger time frame. But right here, if it wants to move out in extensions, if it wants to hold this trade, if it wants to hold the 50-day, that could be the low, but only time will tell. On any ramp, you want to be very cautious, see what happens around this 10-day. If it rips back above that 10-day, you do not want to try and stay short. If you start to see selling coming in there and aggressive selling, then it might be a nice shorter term trade to try and trade for a retest of those lows. But again, I really have no interest in trying to play gold to the short side in any way, shape, or form. I'm only looking at this from the long side. Now, and again, nothing much has changed in terms of all those other things we've discussed. Let me just, before I shut this down for the YouTube, let me just look at Kiwi, because as we said, this is our preferred trade. And you see how it's been weaker than Aussie in terms of preferred trade, in terms of Forex and this correction here. And what you want to watch is how the weekly closes, right? This is trying to go for a third weekly correction. As we said, conviction short. We like this. We want to see a weekly close below the 65. That close below the 65 continues to give us even more conviction for that move back in the 62 at least. And there's not much to change here, but for the reasons we discussed, for the location, for the season, etc., I hope it makes sense how there are a lot of ways to express similar trades, and it's up to you to try and pick the best way of expressing that idea. And as we've been going on and discussing this week, the similar trades were shaping up on Aussie and Kiwi, but look at the difference between how Aussie behaved and Kiwi behaved, right? And we said it's up to you to choose your own adventure. But if you're looking at location, if you're looking at patterns, if you're looking at the structure, if you're looking at the cycles, if you're looking at seasonals, it's clear that you would expect Kiwi to be, you would expect to have a better bang for your buck by expressing that view, this correction here on Kiwi and not Aussie. Now, does it have to work? No. Is it always going to work? No. But if you're trying to do your homework and take the best possible educated guess, you would have been short Kiwi for these past 3 weeks, not Aussie. Okay, so let me just stop this. So again, shout out to all the YouTube guys. Hope you enjoyed this, and let me tackle some of the questions that are